Uh, welcome, welcome to this session of basic accounting. This is the last session for basic accounting. We'll move on to depreciation from the next class. Okay, let's start with this. Uh, and let me know what is the answer, right? And if you have idea of capital and revenue expenditure and capital and revenue receipt. Okay, Elia, Anushe, it's the business of a person involved in motor vans or motor vehicles. Now, if he's selling motor vehicle, that is his ordinary activity, that is his normal activity. That is like these motor vehicles are goods for him. So he's making sales. That is considered as regular revenue, right? But if he receive cash from sale of shares, or if he receives cash from uh, sale of shares, is like not a revenue income, it's a capital receipt, right? Sale of motor van is a revenue receipt, not a why, not for him a capital receipt, because he's involved in selling and buying motor vehicle, right? So keep this in mind, keeping this in mind, that he is involved in buying and selling motor vehicles, right? So if he's involved in buying and selling motor vehicles, that is his revenue income or revenue receipt. But what about the capital receipt? Elia, could you answer that? Yes, Elia, your answer is correct. I'm just switching on your voice. Could you explain that? And welcome, Shapar.
Sir, can you hear me?
Yeah, I can hear you very well.
So, sale of motor vehicles is a revenue income
Right,
for the retailer because he's involved in that business. If you look
right.
at one issue of shares, so it is a capital income, and the sale of surplus premises. It is also our capital income because he's not involved in that business. So our answer would be B, 1 and 3.
That's great. Thank you very much. Anusha, is it fine with you? Shall we move on? Let me know, what Elia said is 100% correct. Let's move on to the next one. Now, this class also, this was in my workbook as well. This question has been repeated multiple times with the same figures, right? Try and do that. Let me know your answer. And I hope this time it's quite a repetition. Okay. Uh, Maria, good effort, but you have to think it once more. Your answer is half correct. Now, the problem in MCQ is that you don't get half mark, right? Either you get 1 mark or you don't get any marks. So think of it, if it is a part of paper 2, perhaps it's a 2 marks question and you will get 1 out of 2. Think of it. Suman, what is your answer? Chapar, Elia, Anushe. Suman, what is your answer? Are you hearing me, Suman? Okay, listen. The thing here is the trader has not recorded the accrual. Means his profit is overstated by 375. Yes, Elia. Maria, is it fine with you? The profit is overstated by 375 because he has not recorded the accrual. Now, rather than recording the accrual, he recorded the same amount as prepayment. Now, prepayment reduces your expense, and reduction in expense lead to increase in profit. Elia, am I right? Like you have not recorded the accrued expense, which is overstated your income by 375. Then this same accrued expense is recorded as prepaid expense. Now, when you record the same as prepaid expense, right, your expense goes down, and when your expense goes down, your profit goes up. So the profit goes up by another 375. Look at my answer, right? Is accrued expense not recorded? The profit is increases by 375, and there's a prepaid expense recorded which is not there, but you recorded that. It's again 375, and your profit is overstated by 750. Anusha, is it fine? Elia, Maria, Soban, Shapar. Okay. This one, by means of a ledger account or by adding and subtracting. Uh, Try it on your own and let me know your answer. Correct, Shapar. Correct, Elia. Correct, Subhan. Shapar, I'm switching your voice on. Anushe, Maria, check what she's saying. Shapar, could you please explain what you did? Your answer is correct. Hmm? Okay, Shapar, your device is self-muted. Unmute your device so you can speak and I can hear.
Alright, sir, can you hear me now?
Yeah, I can hear you very well. Oh, I'm lost
Okay,
now.
so what we're going to do over here is that we have a prepayment of rent that has already been made previous year, which is going to be basically
Used in this year. I can't. Hello.
okay. So we have a prepayment over here of 1400 which we made last year. This year, further payment of 1300. So 39 cents of this year, including an accrual that hasn't been paid, but the services has been incurred.
Okay, that's right. Oh, this is because of the internet. I somehow missed your voice in between. Okay. Uh, Shapa, thank you very much. I mean, because of I think internet connection, sometimes are lost in between. I'm just following. Look at the answer, right? I'm showing you how I did it more or less the same way that Shapa told us. There is a brought down balance of prepayment that will become expense for the period. During the period, we have made further cash payment, and then we have received services, but we have not paid a certain amount. So the total amount that you will charge to income and expenditure account, sorry, to income statement is 16,100. I repeat, the total amount that you are supposed to charge to your income statement is 16,100. Right? Thank you, Shapar. Let's move on to the next one. Right. And that is basic accounting equation. Assets minus liabilities is equal to capital. So total assets minus total liabilities is capital. I expect each one of you to come up with the correct answer. And please share your answer with me. Okay, Elliot, correct. Great. Maya, think about this loan stuff, what it is, a liability or an asset. So it's assets minus liabilities, right? And you have to determine how many of them are assets. Haris, Subhan, I'm looking for an answer. Assets minus liabilities. Anusha, you have to total the assets and you have to deduct the liabilities from it. You have to identify first which one of them are assets and which one of them are liabilities. Shapar, correct. Maria, correct. Anushe, good, very good. Uh, Maria, shall I open your voice? Would you like to explain it? All you have to do is to let us know what are the assets and what are the liabilities and then add and subtract. Maria, I'm switching on your voice. Elia, I'm switching on your voice. Please do explain this one.
Sir, can you hear me?
Yeah, very well, Elia.
So it is said a motor car valued 2,500. So it is an asset.
Right.
And next is inventory, which cost 4,000, with a sale value of 5,800. But as we know that inventory is valued, or it is recorded with a lower value. So
Right. Lower of the cost in an RV, so it's cost.
it will be 4,000. It will
Right.
be an asset. Bank
Right.
overdraft is our liability.
Is a
And
liability.
next is a loan to a friend. So we have given the loan to a friend, so it will be an asset because he will give he will repay us. So
Okay,
1,000 is our
great,
asset.
great. Very good, Elia. I mean, look what Elia just said. Loan to a friend is an asset, not a liability. So when you added them up, what is the amount, Elia?
So when we add all the assets, it is 7,500. 500 is our liability when we minus them. So 7,000 is our answer, which is B.
Okay, thank you very much. Great. Anushe, your answer is also correct. See what I did. I did exactly the same what Elia said. 7,500 are my total assets. 500 is my liability, and 7,000 is the answer. Okay. Let's move on to the next question. Anusha will discuss that later, but just to quickly run through this again, I'm talking about the last question with Anusha. Uh, Inventory should be valued at lower of cost and net realizable value. So whichever is lower will record it at that value. So here in this case, cost is lower, which is 4,000, and an RV is over 5,000. So we'll record it always at lower of cost and an RV. Whichever is lower, inventory should be valued at that point, at that value. Okay. Coming to this thing, accrued income. See, accrued income has two impact, right? One is that accrued income is a current asset, and it is an income for the period. That is like cash that you have not received, right? But you have provided the services. So if you have provided the services and goods, that becomes your income, right? So that will be recorded in the income statement. And on the other hand, you are supposed to receive that amount, so that is an asset. So accrued income is recorded as an asset in the statement of financial position as current assets, and in the income statement as part of your income for the period. Accrued income means we have provided the services and we have not received the cash. So we are expecting the cash to come. That is an asset. And because we have provided the services, realization concept says that that becomes our income. Let me know if it is clear so I can move on to the next one. Please, Anushe, Soban, Haris, Elia, Shapar. Okay, I got all the answers correct. Haris, would you like to explain it quickly so we can move on to the next question? I'm switching your voice on, Haris. I hope your device is perfect now. Huh? Haris, switch. Okay. Haris, unmute your device. You're self muted. Right. Okay, एलिया को ऑन करो. Elia, I'm switching your voice on. Can you just explain it quickly so we can move on?
So, sir, can you hear me?
Yeah, I can hear you very well.
So it is cash withdrawn from bank for business use. So cash is taken from the bank. So bank will decrease by 200 and cash will increase by 200.
That's
And
correct.
in the next, cash is banked, which means that cash is decreasing by 120 and bank is increasing by 120. Cash is decreasing and bank is increasing. So the effect will be C, cash account is increased by 80 because a greater amount is put or it is in the cash, which is 200,
That's right.
and bank decreased by 80 because we have withdrawn 200 and only we have invested or we have put 120, so the difference is 80. The answer is C.
Correct. Good. Good, Elia. Very good. Let's move on to the next question. Looking for answer. Shapar, correct. Your answer is good. I mean, it's correct. Thank you very much. Eli, I'm looking for answer. Maria, Larip, think once more. RS, looking for answer. Anushe, uh, Shapar, would you like to explain it? I'm switching your voice on. Shapar, can you hear me? Elia, your answer is also correct.
Alright, so am I audible?
Yep.
Okay. So basically, what the question says is that up till 1st June, you're supposed to be paying 500 per month, including first rooms, obviously. And starting from 1st July, you're going to be paying the rent as 600 per month. So that means it was raised by 100. According to the question, the year ends at 31st October. That means the year starts in November the 1st. So
That's
counting
correct.
from November,
Right.
November, December, January, February, March, April, May, and June, we will count the value of rent as 500 per month, which means that 500 into 8 months,
Right.
which gives us 4,000.
4,000. That's correct.
Yeah, and then for the remaining months after June, that means July, August, September, and October, the remaining 4 months, you're gonna record it as 600 per month, so that makes 600 into 4, and the total value will be 6,400, which leaves us with three options where it's going to be A, B, and C. Now, since it's an expense and it's nominal and it's not uh, a receivable or payable, it does not, we will not enter it into our statement of financial position, so that makes it C as an
Great.
expense of expectation.
Thank you. Thank you very much. Lare, look what she said. I'm just showing my answer. Look at the screen, and you will find exactly the same as Shapar said that, from November till June, right? It's November, December, January, February, March, April, May, June, 8 months. 500 into 8 is 4,000, and then July, August, September, October. So 600 into 4 is 24. The total amount is 4,000 plus 2,400. That makes it 6,400. Now, what you need to do here is, uh, because the amount that you paid on 1st of October will finish by 31st of October. So there is no accrual, there is no prepayment, and there's no payment to be recorded in the statement of financial position. The only thing that you will record is income statement 6,400. Okay, let's move on to the next one. Okay, Subhan, your answer is correct. Would you like to explain it? I can switch your voice on. Make sure that your device is not muted. Uh, Subhan, your device is still muted. Larip, shall I switch on your voice? Your answer is also correct.
Sir,
Yes,
can you
Larip.
hear me?
Yeah, I can hear you. Try and explain that
Sir, can I
a
start?
little louder.
Okay. The inventory was valued at 16,100 previously,
Right,
which excludes the purchase of $3,700 of goods.
right.
So when we purchase $3,700 dollar goods, so it should be added in the inventory. So
Very
the
good.
original, so the cost will be, so the cost of the inventory would be 19,800,
Excellent.
and because we have purchased inventory, so our trade payables would be increased by $3,700.
Right.
So previously they were 5,200, and now it would be 8,900 after adding 3,000 an amount of $3,700. And other
Excellent.
payables, it would not affect other payables because we have purchased goods, so it would not affect them. And the
Great.
answer is D.
Excellent. Brilliant. I've done the same. Uh, thank you very much. Let's see what Lareb has just said. I did almost the same way. There was an inventory at the beginning of the period, right? That was 16,100, and the inventory that I purchased, I added 3,700. And because when you purchase inventory on credit, your trade payable goes up, not the other payable, right? Other payable has no effect. That's trade payable. Other payable is for, suppose you did not pay electricity bill, or you did not pay telephone bill, or you did not pay salaries. That is other payable. But for inventory, if you buy, you write trade payable, right? So trade payable will also go up by 3,700, making it 8,900, with no effect on other payable, as Larif just said. So your answer will be 19,800, and then 8,900, and then 2,000. Right? Great, Larif. I'm glad. But you joined late. You should have joined earlier. Okay. Let's move on to our next question. Let me know if it is okay. Maria, Elia, Shapar, Anushe, Haris, Taha. Okay. Let's move on to the next question. It's just simple one-liner answer. Elia, Shapar, what's the answer? It's not very difficult. Soban, just check out your device. You were muted. Check out your device. I want to switch on your voice. Elia looking for an answer. Shapar, Maria, Anushe.
Yeah, can you hear me?
Yeah, I can hear you now. Very well.
Okay. Sir, the rates were paid as a prepayment for 3 months. So the amount paid was $3,000. If we
Okay.
calculate, so the total rates paid were for 6 months, in which 3 months payments were the prepaid for rates. So we will calculate like 3,000 into 3 upon 6, and we have prepaid the amount $1,500 for rates, which will
Okay, and when
end up.
is your air ending, Soban?
Sir, our year ending is 31st March 2015.
Right. And you paid 3,000 for 6 months, right?
Yeah,
Starting from or ending on?
ending on 3 months prepayment. No?
Yeah. No, but when is your prepayment ending? When did you make the prepayment?
Okay, on 1st November.
On first,
November,
and your air is ending at.
31st December.
Check it again. The payment you made on 1st of November, right? But it will last till which month?
31st March.
That's correct. See, what Sobhan just said, it's correct. The payment you made in November, but that's for a 6 period ending in March, and your air is ending in December. So you actually paid October, November, and December, and the amount that is advance is for January, February, and March. So half of it is advance, and advance will be recorded as either receivable or prepayment, and that will decrease your expense. So, Soban, when the expense decreases, what happens to profit? Hello? I,
The profit is understated.
Soban, come again, come again. I just miss out part of it.
The profit is understated when the expense is recorded more.
Okay, when the expense is recorded more, so you have to decrease the expense, right?
Yes.
And when you will decrease
That
the expense, the profit will go up, right?
yes.
So among the options, what it is asking is, the effect. So the effect is what?
The effect would
Yes,
be
Soban.
the profit would be understated by $1,500.
Profit will be understated by $1,500, right? Is it okay, Anushe? Let me know, Elia. Okay, this is an easy one, right? Inventory increase or decrease, we all know what effect it has. So just let me know the answer. Anushe, Maria, Haris, Taha, looking for an answer. Maria, Elia, Shapar. It's an easy one. Soban, Lare. Shapar, your answer is correct. Soban, correct answer. You know, uh, Lare, we have to check it again. Um, I'm just going to the earlier question, right? Please bear with me. I will come back and I will ask Shapar to explain this to us. Take a screenshot and see it in a while. I will come back and before that, I want to explain the last one again. Okay, now see, the payment is for 6 months, right? Total of 6 months, right? And you paid it in November, right? But it will cover a period till March 31st. So you have October, November, December, January, February, and March. So it will last till the 31st of March, right? It covers 6 months. So 3,000 divided by 6 is 500 per month, right? And your year ends on December 31st. So it is advanced for January, it is advanced for February, it is advanced for March, and you have not recorded the prepayment, so your profit is understated by 1500, right? You have not recorded the prepayment. Otherwise, if you have recorded the prepayment, your expense would have gone down, and but you have not recorded the prepayment, so that is 3 months multiplied by 500, 1500, your income is understated, right? Is it okay? Let me know. The student who has just asked me about this to repeat, I've repeated, please let me know. Okay, I'm going back to the same question and will ask Shapar to answer that. Okay, Shapar, your answer is correct. Could you please explain it to the other classmates?
Am I audible?
Yeah, you're very well audible.
All right then. Well, in this question, the closing inventory has been recorded as 3,000 instead of 5,000. That means it has been understated. Now, the effect on profit of the year will be that your closing inventory is basically directly proportional to your gross profit because it is something that decreases your cost of goods sold.
Very
And
good, excellent.
this is how is now if you increase the closing inventory, your cost of goods sold will be decreased with 2000 as well, which will cause an increase in your gross profit by 2000. So that means your gross profit of the year is understated, and
That's correct.
obviously your profit of the year will be understated as well. Well, on the net assets, the effect would be that, net assets means the total of assets and subtracted by the liabilities. So now over here, now when you increase the asset, your net asset will increase. Now, if you go from 3000 to 5000, that means your actual your actual recording should have been 5000,
Right.
and it must have been increased by 2000 over here. But we have understated it by 2000 instead, which is wrong. So that makes both our options understated by 2000, and that is going to be D.
That's correct, Shaba. Thank you. Thank you
You're
very
welcome.
much. It's all for today. We'll be starting depreciation. Please inform your classmates and other students if they are interested. We'll be starting MCQ on depreciation from the next class. Allah Hafiz. See you on Thursday.